What is happening to the interest rate at the moment?
A couple of things. Obviously, we've seen 6 rate rises, majority of them being big, chunky 0.5 rate rises, and that's been a huge shock to everyone. It's been a shock because all of our repayments have gone up. We deal in a number of different things, and I keep getting these letters saying your rates have gone up. We're passing that on straight away, as banks love to do. They don't like to pass on the reductions straight away. They keep them up their sleeve for a little bit, but where we see it is they've started to slow it. And I think that's a really good thing because there's a lot of talk now, particularly in the media, which can be really helpful sometimes around just it's slowing up. Global recessions on the horizon with things happening in the US around their midterms. The UK has got some interesting things happening with their policies at the moment, with their new Prime Minister and Treasurer. So I think what we're seeing is a little bit of trepidation from the RBA. They've reduced the latest increase was 0.25, so they've steadied up a little bit. There's talk that we'll probably get another 0.25 next month, and then they may sit through December and just see what the numbers come back at. Inflation numbers, CPI, and unemployment's another one they're looking at as well. So there's some key indicators there that will help them to make good decisions. As far as competition is concerned, which is probably more relative to all of us that are in property right now, is that there's a huge amount of competition out there. And this is where if we can let go of our, we call it the BLT, the bank loyalty tax. We all know that we pay a premium if we stay loyal to a bank because it just slips its way up. And there's a lot of discussion around this in a lot of the finance books around how it's called margin creep. So they get you in on a nice honeymoon rate, or it's a great rate at the time, and then their rates move up for what they call their back book. So if you have a loan on, let's say Bank of Queensland, they're my old stomping ground, and they're really good at this. They'll put out an amazing special. They'll hook in lots of business at a really cheap rate, and then 3 to 4 months later, we'll see their rates go up outside of RBA rate increases. So they're just pumping up the tyres a little bit on the vehicle. It makes it go a bit faster and it's a bit more profitable. So that happens just organically with every lender. Bank of Queensland are one that we've just seen have done it a few times over the years where we've really noticed it, that they're particularly good with it. So I think the key messages there, takeaways, are probably that competition can save you a lot, and therefore with diminishing profitability, that we had an amazing time for a period there for a couple of years whilst they were in the cash rate was at 0.1 or thereabouts. We've all made good commercial outcomes as a result of that, but now we have to think a bit more. So I think now's the time to let go of bank loyalty and just have a look at what the options are, because at least if you know what the options are, we all know what the options are, we can make a good commercial decision around where we finance our properties.